versus inflation, right? Because this is what the Bank of England is telling us it's looking at. In fact, it's pretty much looking at this and nothing else at the moment. I think it's the message coming from them. That was actually a lot higher than expected. So that was 5.9%. Consensus, I think, was 5.4. The Bank of England was 5.5. But here's the thing. I mean, we learned this time last year the April figures are highly volatile. It's the start of the financial year. It's when a lot of annual price hikes come in the service sector. So we saw something very similar. So it shouldn't actually be too surprising that this figure has been a little bit all over the place. And I think next month's figures should be a little bit more predictable. So you're right. We shouldn't sort of take these figures and sort of, really infer too much about the longer term trend. I think it probably does reduce the chances of a June rate cut. Our long held base case has been August, but those odds you just quoted, they sound a little bit too low for June. I think it still hangs in the balance.
Yeah, 100%. And having spent a lot of time in the Bank of England recently, talking to the governor and others, I just think that the markets are just so jumpy on it. Anyway, look, more importantly, the trajectory thereafter August as well, because as we know from monetary policy reports, the inflation is going to pick up again at the headline figure, even when it troughs at some stage, whether it's trough now or have you. Even if we do get a rate cut, June, August, the trajectory of further rate cuts from there, it's going to be shallower, isn't it?
Well, I think it's very interesting because you mentioned those forecasts for inflation to pick up again. The Bank of England's expecting inflation to end the year close to 3%. I'm not so sure about that, actually. I think we'll probably see inflation dip below the 2% target, maybe only fractionally, but nevertheless below when we get those figures for May next month. And I think it will stay there or thereabouts for much of the rest of this year. If you look at some of the drivers away from services, the story is actually much better. Food inflation will probably fall to near enough zero this summer. There's also a bit more disinflation in some of the goods categories we look at as well. So actually away from services, the story is still kind of okay. So I think based on what the bank is telling us, based on that trend, I think we are still looking at a series of rate cuts this year. There's clearly a question mark as to when they start, but I think we could still easily see 3 rate cuts this year.
James, I just want to pick up on the Prime Minister's comments that inflation is back to normal. I've been debating in my own mind whether inflation is back to normal. Is this a new normal? Because we could still have some lumpy numbers coming through in components like services, but if the overall headline is back around a 2% handle, sometimes we might slip below that 2% level, then is that the new normal? It might look different to other cycles. So effectively, is the Prime Minister right? Is inflation back to normal?
I suppose what's normal, right? If normal is what we were seeing before the pandemic, then I think probably not. I think we are probably in a higher and actually more volatile inflation regime than we were used to back then. I think there's lots of things you could point to as to why inflation could be higher over the next decade, be it sort of demographics, be it the energy transition. Lots of reasons to think we're heading for that. But I think in the shorter term, if normal is closer to 2%, and as I just said, I think probably for at least the next sort of the rest of this year, maybe we're around that idea of normal, but thereafter, I think very uncertain.